Next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity. First question about the Nigeria project. Do you foresee this project getting kicked off in this financial year, given the timeline you mentioned, or it is more likely to be in the next financial year?
No, definitely we are saying that we expect to close it soon, and definitely within this financial year. That's very much within this financial year.
The execution, however, will mostly happen in the next financial year.
Right. No, that's what I was trying to understand, that it will close this year and then the execution. So the revenues will essentially come to us in the next financial year. Is that correct?
That is right.
Not in Q4. Okay. And then just a longer-term question, given the opportunity you are seeing both in the domestic and the international markets, what's your prognosis on the growth that we can see in 3 to 5 year time frame? Are we to expect that you can, at least double in the next 4 years or something? Or, if you could just give some color as to how you think about the longer term and relatively how you're building capacity internally for that kind of growth.
So as you see, the market is seeing a robust growth within India, and with the Nigerian opportunity, we foresee a significant growth in our revenues and what the size of the company is. But and we expect that within 4 to 5 years we can very easily double our revenues.
So let's say if you are doing 8,000 crores this year, you're saying in 4 years or so, we can definitely look at doubling our.
We can easily.
Amit is talking about other than Nigeria and Reliance. Now, once Nigeria comes in and Reliance comes in, obviously there will be a huge growth in the revenue in FY26 as compared to FY25.
Right. No, that's exactly what I was trying to understand, that those orders will come next year in the order book. And therefore, from what you are saying that we will do 8,000 crores this year, at least in the next 2-3 years, we should see meaningful growth. Like maybe you double in 3 years. That's what I'm trying to get a sense of.
Including Nigeria and Reliance, we will see a huge growth in FY26 itself as compared to FY25. Leaving those two aside, there will be significant growth as well on a year-on-year basis.
Okay, so just to make sure I got this right, you're saying that without these two, you will double in 4 years, but with these two, there will be significant growth next year itself. That's sort of the key takeaway.
Exactly. That's Bahadur has conveyed.
Great. And then just last housekeeping question, on the indemnity payments, if you can just refresh, where do we stand on that? How much is pending, and what is the likely number in September?
As of right now, as we said before also, there are roughly 900 crores of indemnity payments which are expected to be received over the next few years. We believe that we should be having a number in a certain range of about 200 to 220 crores have already crystallized, and something more might crystallize from now till that point in time. However, you have to remember that roughly in December last year, there was a reverse indemnity. In essence, the company received money for an item where the company had already claimed from the promoters. So we have to pay back about 135 crores. So the differential is what is the present crystallized value. It may go up slightly from now till November when the indemnity claims will finally be calculated. As we said, we expect that the interest on the term debt, the term debt payments in the second half will be largely met out of the indemnity payments.
Okay, so the indemnity payment that you're expecting is roughly 140 crores, and the rest will be coming to us over the following years, right? That's the way to understand it?
In that range, yes.
Yeah, okay. All right. Thank you so much, and all the best.
Thank you. Next question is from the line of Abhishek Datta from Anand Rathi Shares and Stocks. Please go ahead.
Hello, sir. Just wanted to understand, can you just update us on Reliance overall renewable energy targets of 100 gigawatts, how in your interaction with the company, how does it split between solar and other renewable energy sources?
Yeah. So as you know, the Reliance have the huge rollout plans, and we have already started the pilot project with them. We are engaged in discussions with them for mega rollouts in multiple geographies across India, and that discussions are taking place. But at this point of time, we expect the rollout to happen soon. But at this point of time, we are not in a position to share more than this.
But it will be a mix of solar and battery storage and other renewable sources? Or what?
Yeah. It can be mix of all the projects, but solar will be the majority portion. That's what we expect.
And we will partner with them for both solar as well as solar and battery storage part.
Yeah, we'll be partnering with them both for solar and battery storage.
And the margin profile will be the same for both of the type of projects?
Yeah, we expect the margin profile to be the same as which is as per the market for the projects of similar size and nature.
And when you say that Nigerian, the final contracts have been finalized for the Nigerian project, what is the final contract value, and has there been any change in the contract term value because of fall in module prices?
No, there is no change in the contract value, and all terms and conditions and values which you have been indicating to the market remain same.
And can you just refresh us, it was quoted as $1.5 to $2 billion, that is the range which you're talking about?
Yeah, you are right. That's the range.
And any further update on beyond phase 1, because it was earlier quoted as $10 billion opportunity. So have you heard anything more from them?
There is no further update at this point of time, but as and when there is an update, we will update the market based on the developments which are taking place.
Okay. Our first focus is to close this first phase. Then we will start talking, if necessary, about the second and beyond.
That's helpful. Thank you so much.
Thank you. Next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So sir, the intensity of bidding in solar projects, particularly for PSUs, orders, have really gone up like a lot. It seems that we have also lost the Khavda order of second phase at NTPC to either ACE Solar or Bondada Engineering. And lots of smaller companies are now bidding for larger projects. So what is, is this now that they are going into some kind of a negative territory or something which we will not even touch now? And many companies are chasing orders, even to keep up with their market cap. So will it necessarily mean that even now the Reliance order also will be negotiated on terms, which are on par with these kind of, bidding?
So thanks, Mr. Hawa, for your question. So I would like to start by saying the market size is pretty huge. So this year, the addressable market, which we are considering for domestic sector, is more than 23 gigawatt, including some of the mega projects coming from PSUs. So as we have seen in mega PSU bids which are coming, the competition is still limited, very, very limited, and we continue to be very competitive. We work on every project costing and estimates extensively, and we bid accordingly to the risk-reward ratio which any project offers to us. So one or two projects where we felt that risk-reward ratio is not in our favor, the margin profile is not matching our expectations, so we have not gone ultra competitive in this project. But the bid pipelines remain strong, and we have focused projects which we will continue to bid and win in line with our past hit rates. So we are very confident of maintaining and exceeding our order book. So we are not at all worried on that part. So we can address that part because market size remains very huge, and and we don't see any impact on our order book because of the new players entering in and some of the players going ultra competitive in some of the PSU bids. Having said that, Q1 was very muted with respect to public sector bids, and I see the high intensity activity picking up in coming quarters. So Q2 and Q3 will see closures of multiple PSU bids where we'll see us also succeeding in those bids. So that's what I'd like to add at this point of time.
And sir, what would be the revenue that you would have lost in the first quarter owing to not having enough BGs?
No, we have not lost any revenue. As you know, as Bahadur has already stated that Q1 always remain muted, and we have not lost any revenue at all. We remain as within our plan to achieve 8,000 crore of revenue in this financial year.
In fact, it is 78% higher than the same quarter last year, Mr. Hawa.
Okay. And sir, even if it doesn't, concern us directly, but, the promoters continuously pledging shares and also, reducing stakes at various points of time in the quarter, causes a lot of disturbance, with not only existing shareholders, but new shareholders as well. So, I mean, can they give any kind of, statement, saying what their strategy is? Because this is, one of the few companies which is having three promoters. So, that itself is something very rare. And then the promoter continuously selling, pledging, and, at least two sets of promoters doing that. I mean, even though it doesn't concern you directly, there needs to be some statement from them regarding this.
So, Mr. Hawa, your concern is well noted. Unfortunately, we as a company cannot comment on what the promoter chooses to do with his stake for whatever purposes. We will, however, pass on this message to them appropriately. And if they choose to come out with a statement, we will leave it to their decision.
Thanks a lot.
Thank you very much. Next question is from the line of Aejas Lakhani from Unifi Capital. Please go ahead.
Yeah, hi. Could you please explain me the reversal of the indemnity? I haven't understood that.
All right. In the past, in the very first year, there was a certain amount of liquidated damages, etc., which we had claimed from the promoters. Subsequently, in December of last year, we managed to win an arbitration against the vendor in which those indemnities were reimbursed back to us. Now, obviously, we cannot profit twice. So since we had already claimed it from the promoter, it remains with the company to be set off against the indemnity claim which we will now raise in September 24. So while there is a gross amount of roughly 200 plus crores, as I mentioned, of indemnity, it will have a negative on account of this, which we had already claimed before. Have I answered your question?
Yes. The only, claim that I remember that you have received is from Jinka.
That is the one.
Okay. So, seriously, 135 crore of reversal is pertaining to the apportioned Jinka portion, and the rest that they had given was for other orders.
Yes. So till today, in the very first year, they gave somewhere about 90 odd crores. In the second year, it was 400 odd crores. And the company had to bear the first 300 crores. So all in all, you can say close to 800 crores of indemnity items have been settled from the beginning till date. And out of this, 137 is a kind of double dip, which will have to be reimbursed back in this coming indemnity calculation.
Okay. And in this coming indemnity calculation, which I think sets forth in October or the likes,
yes.
Is there anything that has to be claimed from them, or is this just the reversal of 135 is the number?
I already mentioned that as of right now, the number on a gross basis stands somewhere around 220 crores. We have roughly 135 crores of reversal. The net is the amount that we presently stand as crystallized and claiming. The amount may go up depending on further crystallizations from now till September 30th.
Got it. So is it fair to understand that you mentioned the 220 crores, so 220 crores less 135. That's the difference that you will be receiving from them.
As of today.
Got it. Perfect. The other one is that, in our international business, barring what you mentioned where BG has been taken to 15% and you have implemented more vendors from a replacement standpoint as a pass or as a part of the contracts, are there any other sort of, cladding that you have done so that, episodes from the past do not repeat themselves?
No, but actually, with the enough safeguards have been taken, and we don't expect any repeat from the past. We have chosen a mix of the modules, so we are allowed to use for the multiple suppliers, and the MSA's terms and conditions are also very, very tough. So it is not very easy to renege on those contracts. So it's a pre-approved mix of 3 module suppliers, all tier 1, whom we can go to if somebody chooses to renege on. We have sufficient amount of bank guarantees from the module suppliers to cover ourselves, and as such, the module capacity across the world are very, very stable. So even despite considering that, though there is no risk perceived based on market conditions, but enough care has been taken with respect to bank guarantees, pre-approved list of module manufacturers. So that is in place to address the risk, and we have already finalized the MSAs for the contracts we have got. So there is no uncertainty remains on that particular front.
Okay. The other one was pertaining to Nigeria. So I think in your opening remarks, you mentioned that as the orders get closed, there's 6 months of, time that you are budgeting for financial closure. So on this, I wanted to understand that, I think you've stated earlier that there is a financial bank which is involved and you have a domestic partner. So it seems that all the constituents required are already in place, and so I'm trying to understand that the 6 month, which is quite a long duration, what is the reason for that from a financial closure standpoint?
This project is funded by Exim Bank of USA, and and the US government approvals which are involved. So just because of the multiple agencies from the Nigerian government and the Exim Bank of USA is involved, we are projecting a conservative timelines of 6 months for the financial closure. Sun Africa took roughly 9 months to close because we have a model in place. Sun Africa has recently closed one Exim Bank funded project in Angola, and Sun Africa has taken 9 months to close that project. But since that was the first project, we expect that the timelines for the Nigeria project would be expedited and we'll be able to close it within 6 months period.
Perfect. That's helpful. And lastly, you mentioned that, the Reliance execution of the pilot order that you'll be doing in FY25, they have multiple technologies at play. And you mentioned that larger execution for Reliance will take place in 26. Is there any chance that since there are multiple technologies at play, Reliance may sort of just wait to see the full impact of how these technologies play out from an generation capacity before they sort of decide on their chosen method, and that could delay the visibility of orders from Reliance?
No, actually that's not what we said. We said the revenues in FY26 will be significant higher with the Reliance orders. So we never said that they will come only in FY26. Right now we are working on a small project, which is the pilot project, which is their testing, which is part of any growing organization and any forward-looking organization. They want to test and be on the forefront of evolving technologies. So we should not relate that to the rollout of the future projects. The future rollout projects on mega projects in multiple geographies are in advanced stage, and we expect some orders to close soon. But we'll not like to give a definite timeline to that. But we never said that the orders will come only in FY26. We expect orders to close soon, some of the mega projects or orders to close soon, but I will not give a timeline to that.
Noted. And this will be for the Khavda Reliance. The projects will come from Khavda.
That I will not say. We are talking for few geographies with them, and finally Reliance will take a call which geography is the rollout to start, and that includes Khavda as well.
Got it. Okay. Thank you. All the best.
Thank you. Next question is from the line of Alisha from Envision Capital. Please go ahead.
Hi, sir. Good morning. Thank you for the opportunity. 2 questions. One, with respect to Reliance pilot, have we finished executing the pilot project, or when in this year are we expecting to complete it?
We have started the execution, and we expect it to complete within this financial year.
Okay, understood. And earlier, because of what we faced historically, we were more cautious of taking export orders, and while we continue to do that, in the order inflow that we're expecting for this year or going forward, how should we see the mix of exports? Because we did win some in this quarter, and we're talking of maybe bidding for a few more. So how should one assume the order book split between domestic and international markets going forward?
As we have regularly stated that domestic market is booming, and our mainstay and strong focus remains on the domestic market. So the mix of the order book will be heavily tilted in favor of the domestic market, and we will work very cautiously and selectively in picking the international orders. So that way only domestic will dominate, and the international orders will be picked only after heavy due diligence, checking the margin profiles and whether they are matching or meeting all the criteria of our revised risk matrices. So that's how we'll pick up international projects. Domestic market will continue to dominate and will constitute majority of the order book.
From a resource and bandwidth perspective, is there an internal target that we will probably not let exports cross 10 or 15% of threshold?
Could you please repeat your question?
I was saying that from a allocation of resources and bandwidth perspective, is there an internal target stating where we will not let the exports cross 10 or 15% of our order book?
So yeah, it is around 20 to 30%.
20-30% of order book will be international?
Yeah, can be 20 to 30%. Order book can be international.
Oh, and all of this we're discussing is excluding Nigeria, because I understand that can skew the order book.
Come again?
I think this is all excluding Nigeria.
This is excluding Nigeria.
Yeah. This is excluding Nigeria. Of course, this is excluding Nigeria.
Understood. Okay. Thank you and all the best.
Thank you. Next question is from the line of Ashish from InvestQ. Please go ahead.
Yeah, sir, a lot of comments that have come on the non-fund-based limits that we have. So just to understand it clear, you said that at any stage, approximately 50% of the project value is required to be under BG. Is that correct? And if so, around 8,000, 9,000 crores would need, say, 4,500, 5,000 crores of limits on a rolling basis. Is that correct understanding or something else?
No, that is not what I said. The bank guarantees are 20% of a project value, typically. In fact, in some of the larger PSU projects, the performance bank guarantee is even less than 5%. The performance bank guarantee is what remains for a period of roughly, let's say, 3 years. The advance bank guarantee falls off once majority of your supplies are completed, which is typically a year. What you need are LC limits for 90 to 120 days for critical equipment supplies. That is a churn. So all in all put together, I said it could be around 40 to 50% at the peak of any project. It does not mean that if I need 8,000 crores of turnover, I need to have 50% of the limit at all points in time. It is a churn. Now, just as today we have certain limits which have been unfrozen and we expect more to get unfrozen, we are also in talks with other banks to get incorporated into our consortium, considering that we are looking at a much larger turnover going forward.
So, sir, so you said that Q1, the reason was not any problem with the availability of non-fund-based limits, but mostly seasonal. So going ahead, as our turnover increases, how comfortable are we in terms of the current limits that are there to achieve that 8,000, 9,000 crore this year? And because rating upgrade will take its own time, so that's what I wanted to understand.
So rating upgrade has taken its time to move out of a default rating, which, while it is recommended at 90 days, it did take 90 days to come out of it. Now, it is up to the management and discussions with rating agencies to move quickly to an investment grade. One can never say with absolute certainty that a rating upgrade will happen, but management is very, very confident that the rating upgrade should happen very, very shortly. Once that happens, even those banks which are looking for investment grade to start working with us should start working with us. So we remain confident that we will have the limits for achieving the turnover that we have projected for the year.
Okay. And lastly, if I can conclude on this, basically next year our growth will be much more, so we would be needing more of this to be there. So how sure are we that we can go to that extent? Maybe if the turnover reaches maybe 50% growth over FY25, then how do we plan to, and are we comfortable enough to achieve that requirement?
Yes, we have to be. Because if you are talking of a Nigeria project, which is, let's say, $1.5 to $2 billion, you will require limits of roughly $800 to $900 million, for which we will be in touch with certain senior banks, not only in India, but also outside India. There are various options which are available to the company, and we will work on getting those limits in place well in advance.
Okay. Sure. Just a request.
You have to also keep in mind that the projects are negative working capital, so you end up receiving your monies earlier. So there is always a churn as far as limits are concerned.
Okay. So I don't know how we address this, but any communication on this part within the quarters, if it is possible, just to give us.
Rating upgrades have to statutorily be communicated. So once that happens, it is part of the LODR. So once that happens, we will keep you posted.
Sure. Thank you.
Thank you. Next question is from the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello. Am I audible?
Yes. Can you speak a little louder?
Audible now?
Yes, thank you.
Yeah. Thank you for the opportunity. Sir, what would be the interest cost for this year?
The interest cost will be significantly lower than what it was in the previous year. It should be in the region of about 50-55 crores, all in put together.
Okay. And sir, can you comment on this deferred tax? Can you please throw some light up what measures also we are taking on to use this?
Deferred tax was created in the past for losses, both business losses and unabsorbed depreciation. However, it was not created on all the losses. It was created up to a point in time, and then management decided not to create any more. A lot of the deferred tax was utilized in the previous year. As of the June quarter, we have utilized about 10 crores. We still have another 30 crores of deferred tax which will get utilized. And that is why the effective rate of tax of the company is fallen, because we have a tax shelter. Not the entire tax shelter has a deferred tax created against it. There is only about 30 crores more which would need to be provided. It is a non-cash item. It is a reversal of an accounting entry which was done in the past.
Okay. All right. And so just a request from, I guess, majority of the analysts and the shareholders, if you can, put up announcements for any orders that you have received during the quarter. It's like, we are getting an update only after a quarter. So might be helpful for many of you who are, understanding the company. It would be a good, I guess, choice to, put up this when the company receives the order or something.
Yeah. We take that feedback positively, and in future, we're going forward, we'll do that.
Thank you so much, sir. Much appreciated. All the best.
Thank you very much. Ladies and gentlemen, due to time constraint, that will be the last question. I now hand the conference over to Mr. Amit Jain for closing comments.
Yeah, I would like to thank everybody for joining the call, and I would like to make the closing remark that with the two back-to-back quarters, positive quarters, we remain upbeat about the growth prospects of the company. And I take this opportunity to reiterate our guidance both on order book and revenues. We are positively going to meet both the guidance as respect to order book and revenue of 8,000 crore plus within this financial year. With this, I would like to close the call, and you kindly get in touch with Sandeep Thomas Matthew or Strategic Growth Advisors, our investor relation advisors. Thank you once again and have a great day. Thank you.
Thank you very much. On behalf of Sterling Wilson Renewable Energy Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.